Good morning, everybody. It's Tuesday, August 6th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 3.5 at 403.5. November soybeans were down 14.25 at 1026.5, and December Chicago wheat was down 5.25 at 558. Yesterday afternoon, we had crop conditions out. Corn dropped 1% in the good to excellent category at 67%. That's still above the average of 62%. Soybeans were up 1% in the good to excellent category at 68%, and that's well ahead of the average of 60%. Good to excellent for this time period. Winter wheat came back 88% harvested. That was versus 82% last week and 86% for the average. And the spring wheat crop rated good to 74% good to excellent. That's unchanged on the week. Good morning, guys. Pretty sharp drop in open interest after yesterday's trade. Still, finished a little lower here overnight. Outside markets were a little bit higher here to start the morning. Ben, maybe kick us off with a few thoughts, and then we'll throw it around the room.
Yeah, yesterday we obviously had a really big day in outside markets. Huge equity sell-off. None of this stuff happens in a vacuum. They started the day off quite a bit lower in grains, hovering right above our recent lows going into the day open. And we saw a continual short covering in corn and soybeans all the way into the close. And it was a really lethargic trade, especially consider what was going on in the outside markets. It felt like we were up a lot more than we were because we started out lower. But it didn't feel like anyone had a panic to cover. Maybe this morning things have stabilized for a bit. We're kind of in that tough spot here where we're 6 weeks out from harvest really getting going in a lot of places, 7 weeks, and big short, but it didn't feel like it was truly threatened yesterday. We've seen a tendency to in the last, maybe 4 or 5 days to start our days out lower and find buyers on breaks. So maybe there's a little bit of a quiet covering going on, but it did not at all to me feel like anyone was panicked being short grains yesterday.
Yeah, Justin, maybe some thoughts on the back end of that.
Yeah, I agree with Ben. I mean, when there's a liquidation event like we saw yesterday, it's usually not a one-day thing. So you did a lot of damage. I think we were talking before the show, $6 to $7 trillion kind of wiped out, paper equity in the stock market. So that causes a lot of reverberations and issues with margin calls and people rethinking, their overall portfolio, all those kinds of things. So I think we'll have more volatility to come would be my guess. There's a Fed decision, if they go and panic and cut rates just because of one big down day, I think that is another sign of weakness. So kind of have to see what plays out here. To Ben's point, when they get out of something, they usually get out of several things, right? So if they're long equities, short commodities, or, there's 1,000 different hedge funds out there with 1,000 different strategies on. So any given time you can have a major move out of nowhere. It has nothing to do with short-term fundamentals or anything. So you get some pretty sharp moves, I would think, coming here. To Ben's point, we're also heading into harvest. So every day we're gonna have a little bit more probably hedge pressure above the market or going into the market, especially I think as we go into first notice day for the September contract, clean up that old crop, supply problem we've talked about for a long time and see where we go. But I did want to make one comment. I've been seeing some things on social media for a long time about, the funds are short, but the farmer's record long. And I think that's misleading too, because, yes, the farmer is long, but there's a natural buyer that has to buy 90% of those bushels every year around the world. So it's not fair just to say the farmer's long. There's also an end user that offsets most of it. So if you really think about the carry out at the end of the year and the fund position, like we're pretty close to balance. Like if you think there's a 2 billion carry out, that's 400,000 contracts of fund short. And the carry out's the difference between how much we're using and producing, right? So I don't think it's as out of whack as it can be portrayed by people in the industry. So that's just one kind of thing I had noticed over the weekend. Those comments been going on for a while, and I think that's kind of a little misleading here when you look at how much we actually use every month.
Person trying to make that point, are they thinking that the farmer's getting squeezed type of a deal, or what's
Well, it's just, the farmers, the funds are short, 2 billion bushels, but we grow 14 and the farmers are way undersold. And those things are all true, but the end users then way underbought, right? They're hand to mouth or so yeah, during seasonality, I mean, that's why you have seasonalities, right? Because you produce it all, you harvest it all in a short amount of time. And then obviously you use those bushels throughout the year. So yes, in the short run, it can be out of balance where there's more, sellers than buyers, the adage. But when you really look at the total balance sheet, are we really that out of line for, the longer they hold a 400,000 contract short, the more imbalance it goes back towards the end user being underbought. Right now, it's in the favor of the hedge funds because we're going into harvest and you're going to have the most supply 6 weeks from now that you're going to have all year. So it's not really a bullish statement by any means, but it's kind of misleading and it's kind of well circulated, that kind of commentary.
Well, and I'm just going to add on to that. I see the same commentary, the same thought process, and it's frustrating to me when they portray this as, like you said, a lopsided or unfair scenario. And the truth is that managed money short has just as much risk as anyone else who trades or hedges. And, they look at it as probably more so of the fundamentals and then the instrument of, they're going to make 15% on their money if they're able to roll it out a few times for having the position. But if something were to go wrong in South America, we start doing a lot of business, volatility creeps in, and we start getting wild moves. They have the same exposure as everyone else does. And, that's what makes a market. So they're just as vulnerable and maybe more so at these prices if something were to turn significantly.
Yeah, and look, they've been right. I mean, I think it's not a secret that we have a big crop, right? Everyone knows we have a big crop now. Right now we're trying to decide. I think the market's probably in that 183 type area right now for corn, for example. Well, that's 6 bushels above a record. So it's not like this is a surprise that we have a big crop coming. It's well advertised. So if you're an end user, why would you be in a hurry to buy it? Everyone, knows it's going lower. There's going to be plenty of bushels. So, when you have drought or production concerns, end users get more aggressive and get coverage. Same as any other buyer of any commodity, right? Whether it's a farmer and have really good margins and you buy cheap fertilizer, all those kinds of things. So, right now the story is pretty one-sided that we have a big crop. When you look at like structure, and we've talked about this before, there's all sorts, you can't just take two variables and say, here's the imbalance. There's crop insurance, there's farm bill, there's all sorts of things that shift that, that risk to some degree. Because if we talked about as you go cheaper and cheaper, the farmer does get shorter and shorter via crop insurance, right? So the market's pretty good. That invisible hand's pretty good at figuring out where that balance is. And, to be fair, we've been kind of sitting at these prices for quite some time now with really good weather and kind of trading the same news for today. It's wait until first notice day when the farmer has to, sell the rest of the old crop. And there's going to be this, big influx of selling, which it does make sense that would happen, but it's also very well advertised. So
if you think trade is kind of 183-ish or in that ballpark, Justin, I mean, are we 53, 54 for beans, or what's your feeling on the bean market?
It's August 6th. I think I'm sure people are leaning that way if the weather stays good. Mm-hmm. Obviously it's just a month offset from corn. So there's a lot more, farmers that have picked ears and analysts and, agronomists. So obviously confidence is always higher on today's date for the corn yield. Now it's just a matter of, like I said, 177 is the record, trading 183. 6 bushels to the above a national record, just hard to do. I think it's certainly got potential in a lot of states, but you have to have a lot of states kind of finish, in my opinion, through August and September, get that good nighttime temperatures, good filling weather, get those heavy test weights. It doesn't end on August 1st and you go, obviously cut the crop and have a record. It's got to kind of finish off strong. And we've had a lot of years where Illinois, I'll take Illinois, for example, because that's where we farm and have a lot of clients. And we've had fantastic, growing seasons the last few years and kind of finish off weak. So still have really, really good crops or even close to record crops, but you kind of take that top, 20, 30 bushels off a lot of times last few years. So again, you look at 2004, 1994, 2014, the years that, had those big records, they finished off strong all the way through. So, and
Yeah,
I'm
so
not
this-
saying I'm not saying it's not a 183. I'm just saying it's August 6th. We've traded that number. Is it just time? Is it time that we get into harvest and there just has to be a lot of cleaning up of old crop bushels and, those kind of things. So,
yeah, and it looks dry for the next, 7 to 10 days for majority of the belt. There's some scattered chances out west, but the temperatures are non-threatening. It is a little drier, so you'd like to see at least that 14 days start to perk up with a little bit more water to your point, to finish it off in the, at least through the upper Midwest.
Yep.
So we'll have to see if it materializes there. A couple minutes coming into the open here. Ryland saw a pretty good drawdown in open interest in live cattle yesterday, down 9,000 contracts. Felt like it was all kind of stock market related there. So what's your thoughts as we start the morning?
Yeah, it just seems like, you've taken a lot off the cattle market just in the past couple days. I mean, we know we're running into option expiration first notice day yesterday. I mean, at this rate, it just the market kind of had to do something. And I think you just had a compounding issue with what was going on in the world yesterday. So yeah, you had big down in commitment, and you took, prices to the lowest level we've seen since, last year. So as of right now, we saw a big up in the beef market. It's kind of light volume, but somebody really wants to hold up this beef market, Dan. Choice was up 417 at 317.94. Select was up 289 at a 300.06. So I mean, like it just kind of feels like on these big down days, we really see guys trying to snatch it up for cheaper prices. I mean, we're on an $8 break essentially on the August contract. So I mean, we're kind of looking forward to cash. We obviously see the big deviation on the board right now. I wouldn't be surprised to see a little bit of a bounce here, just getting a little bit back, just considering we haven't seen the Packers take full advantage yet and really start bidding aggressively at some lower money here. So, which I think most everybody's probably expecting at least by Wednesday, Thursday. So we'll see if that comes to fruition. But yeah, it's just been decimating. So anybody that's got LRPs, hedges, that are deep in the money, I mean, there's a lot of opportunity maybe from the buy side of the market, but there's no reason to really stick your neck out if we are going to see another round of liquidation. It's really hard to outguess when the managed money and the speculative crowd finally throws in the towel. But it does seem like it's a big enough break right now that we've seen, maybe we can start to finally kind of level off. Hog market didn't get beaten up as bad. I mean, front end of the market was a little bit lower. We saw a big down in cash though. So we know that the funds kind of flipped to a long position the previous week. And now, we could see a little bit of liquidation just because, if they're on the wrong side of the seasonal, it just kind of feels like they're getting caught again. So I would just be a little cautious in the hog market as well, because it feels like cash is turning down. We saw like a $7 down in cash. Cutout is hanging in there, but just kind of feels like we've been on this big rally. It's been kind of a speculative led rally, just on hopes that we were going to see some improved demand. And now we're starting to see some of the fundamentals start to weaken a little bit. So could see another round of liquidation, at least in the hogs.
Very good. Appreciate the update. We'll keep an eye out there. If you like and love this show as much as we do, give us a like and subscribe. It keeps you up to speed on everything AgYield, lets you know when the shows are coming live, and then also any premium content that we put out. So it doesn't cost you anything, but throw us a like and subscribe. We certainly appreciate everybody that watches on a daily basis, because we are coming to you live every day that the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. Thanks for all the comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
Thanks, Tim.